the Q1 numbers are going to be very bad. I mean, we know that the economy contracted in the first quarter. The only question now is whether they'll show it on the figures. That said, they have been surprisingly willing to show weakness in some of the other data that we already have, things like industrial production that fell almost 15%. We had services output, which fell almost 15% as well in the first 2 months of the year. And those are typically quite good guides to what happens to GDP. So if we don't get a negative GDP print in Q1, that would be very surprising and raise significant questions about the quality of the data. Once they publish a negative growth rate for Q1, it's going to be very hard, especially given the external headwinds, to reach a politically palatable growth rate for the year as a whole. Like I said, I mean, we think exports could contract 50% in the second quarter, and exports still drive about 15% of China's GDP in value-added terms. So a 50% fall there is going to be a significant drag, even if domestic activity is getting back on track. So I think any target that would be politically acceptable is going to be basically unachievable in practice. So I think they'll seriously consider just dropping the target altogether.
What is the number on Friday going to look like? And could you argue that the fact that the trade numbers that we got out today, perhaps China is setting the market up for an upside surprise when it comes to the official GDP print on Friday?
Yes, I mean, we'd expected most of the March data to actually be worse than the January and February data, because all of the high-frequency figures that we've been looking at suggest that even though there was an improvement in March, the March activity was still weaker than across the first 2 months as a whole. Now, the trade data, put that into question, and it does suggest that perhaps March could be a bit stronger than we'd expected. Even then, I think you're still looking at a double-digit contraction in GDP. And we're currently forecasting minus 16% in Q1. It might be a bit less than that, maybe minus 12 to minus 10, but we're still looking at a very sizable contraction in GDP, I'd imagine. If we don't see that, as I said, I think it will certainly raise some questions given how weak all the main indicators have been so far this quarter.
Do you have a forecast for the Chinese currency? Some economists were talking about 7.1, 7.2 by the end of this year. How do things look?
So our year-end forecast is 7.2. I think that there are some downside risks for the renminbi. I mean, the renminbi has held up remarkably well against most currencies, given all the market volatility recently. But that will actually be problematic for China to some degree, because we've actually had trade-weighted appreciation in the renminbi, which is going to further weigh on the export sector. And more broadly, I mean, China's external position is deteriorating pretty quickly, given the outlook for exports. We're probably going to see the first current account deficit in a number of decades this year. FDI is probably going to slow significantly. And so they're not going to be getting the same degree of foreign currency inflows to fund their outflows. And I do think we'll see greater pressure on the exchange rate later in the year as a result.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.